The dollar turned a bit softer overnight after the Federal Open Market Committee left rates unchanged at 0 to 0.25% as widely expected and offered no surprise to the markets. The Fed maintained its pledge to keep rates at this ultra-low level until mid-2015, and held the $40 billion per month open-ended QE3 program unchanged too. In the accompanying statement, Fed showed concern that, without further policy accommodation, economic growth might not be strong enough to generate sustained improvement in labor market conditions. And the Fed could even expand its efforts if the outlook for the labor market does not improve substantially. While the greenback dipped mildly against most major currencies, it strengthened against the even weaker yen as Asian equities opened mildly higher, diverging from the weakness in the United States stocks. The New Zealand dollar rebounded after the Reserve Bank of New Zealand left rates unchanged at 2.5% as expected, and the accompanying statement somewhat quashed hope for a rate cut. New Governor Graham Wheeler said in the statement that market sentiment has improved from earlier in the year, suggesting the risks to the global outlook are more balanced. Domestically, GDP continues to expand at a modest pace. But fiscal consolidation is constraining demand growth, and the high New Zealand dollar is undermining export earnings. Regarding inflation, the Reserve Bank expects CPI to head back towards the middle of the target range. The central bank also pledged to continue to monitor inflation indicators closely over the coming months. That said, they left no hints on rate cuts. Meanwhile, the Canadian dollar was back under selling pressure after Bank of Canada's Governor Mark Carney noted that the case for adjustment of interest rates has become less imminent. That's in contrast to the central bank's statement on Tuesday, which still noted that, over time, some modest withdrawal of monetary policy stimulus will likely be required. The Monetary Policy Report released yesterday noted that, following the recent period of below-potential growth, the economy is expected to pick up and return to full capacity by the end of 2013. 2012 growth is projected to be 2.2%, followed by 2.3% in 2013 and 2.4% in 2014. On the data front, Japan Corporate Service Price Index dropped 0.5% year-on-year in September, and China Conference Board Leading Indicator rose 0.3% in September. The main focus in European session will be on UK Q3 GDP, which is expected to show 0.6% quarter-on-quarter growth, following a 0.4% contraction in Q2. Other data to be watched today includes the Eurozone M3 money supply, US durable goods orders, jobless claims and pending home sales.